Good evening, traders and investors. Will back here with another one, coming to you with a Friday and weekly market recap. Hopefully you guys had a decent day on Friday in spite of the AI drama. And additionally, hopefully you guys are having a very nice weekend so far as well. Recording this video very late on a Saturday evening. Been taking some time off, spending it with some friends and family. And hopefully you guys have been doing the same as we move into the holiday period. Now, speaking about the AI drama that happened on Friday, well, as you can see, the SPY was down 1% and the Qs down almost 2%. Now, some of that started because of what happened during the Broadcom earnings event, more specifically, the Broadcom earnings call. Now, I'll remind you, we covered this one on Thursday after the close, and although the call wasn't very well received in the after hours, the weakness kind of poured into the morning, and that resulted in Broadcom being down almost 11.5% for the day on Friday. I'll remind you why the stock was largely down despite posting good numbers. Well, number one, it was because of this, the company refusing to provide updated guidance into Q1 and into 2026. Management did not update its prior guidance for 40 to 60% AI revenue growth in 2026, despite indicating that AI revenue was accelerating from 65% growth in 2025 and guiding for 100% growth in Q1. As a matter of fact, they actually guided for flat year-over-year revenue growth in 2021, and we covered that, on 2026 in Q1. And as a result, guys, the market just didn't receive it quite well during the earnings call. And then there was this piece of news as well, which we didn't cover on the channel, which was buried further in the earnings call, which was this one right here. Broadcom on whether the OpenAI 10 gigawatt deal is just a general agreement, not binding. You remember me talking to you guys about these LOIs, the letters of intents, these contracts. A lot of the contracts OpenAI has quote unquote signed are not official contracts. They are letters of intent. And unfortunately, Broadcom's management was unable to confirm whether or not it was a contractually signed agreement. I'll remind you, per contract law, if you go back on this, well, the company can sue you. If it's just a letter of intent, you can back out of the deal and no harm, no foul. Here's what they said. What we were articulating was earlier was the 10 gigawatt announcement, and that the 10 gigawatt announcement is an agreement to be aligned on developing 10 gigawatts for OpenAI over the 2027 to 2029 timeframe. That's it. That's different from the XPU program that we're developing with them. So, not giving any guidance. Management saying, I call it an agreement in alignment of where we're headed with respect to a very respected and valued customer, OpenAI. We do not expect much in 2026. So once again, pushing back on the timelines. And additionally, we had another pushback on OpenAI timelines. This time, a report from Bloomberg, which came out and sent us for wave number 2 to the downside very early Friday morning. So tech was already in a little bit of a tantrum very early morning. And then right around 10:45, 10:50, we got leg number 2. And that was caused by this article right here. Oracle, per a report by Bloomberg, saying there have been, I'll say the report first. Bloomberg came out with a report saying basically that there was some pushbacks on some data center build-outs that were scheduled for 2027, which would be pushed back into 2028 due to, per Bloomberg, labor and construction material shortages. Now, Oracle came out about an hour later officially and said that no. As a matter of fact, there had been no delays in the OpenAI arrangement after the stock slid, saying basically that the site selection and delivery timelines were established in close coordination with OpenAI following execution of the agreement and were jointly agreed. There have been no delays to any sites required to meet our contractual commitments, and all milestones remain on track. But even though they came out and clarified, it was just not enough. The damage was done, and as you can see, in terms of the AI trade, guys, look at all of this red. Everything associated with AI, once again, getting put through the washing machine. And we've been very clear on this, right? This all started roughly a month ago when CoreWeave came out with earnings and spoke about their own data center delays. Since then, Gemini came out with a very nice Gemini 3 model, which put some pressure on OpenAI. And the focus recently has literally been on this. Can OpenAI, a company that has $60 billion per year of contractual agreements with only $13 billion in revenue, can they put up the money essentially for all these deals that they've agreed into? Or have we maybe done a little bit too much, a little bit too soon? And or over the course of the past few weeks, we've been talking about this, guys, to where this year was a question of spending a whole bunch of money, locking in a bunch of infrastructure deals for these data centers. The problem with that is that a lot of these deals and a lot of this revenue growth comes late 2026 and then into 2027, 2028. So now that we have all the deals in place, but not much revenue from them, what happens here in this big old dead zone between now and end of 2026 before we actually start getting the actual data centers with all their power online and all their utilization? Well, what happens during this phase is a period of drama, right? Where every single negative headline, such as the ones we just talked about, get magnified and magnified more and more and more and tear people's sentiment apart. A sentiment that earlier in September and October seemed as though was going to the absolute moon, right? In terms of the bullish sentiment surrounding AI trades, you had many names, many names, such as NVIS going on a record rally, names like Iris Energy, names like APLD, names like CIFR, the memory names such as SNDK, right? Names like Micron, so many names. Names like Broadcom as well, right? Just carrying the entire market on its shoulders. All of these names like Oracle as well, with their massive deal with OpenAI, and then now they've given everything back. So many different AI names had a beautiful summer through fall, and since November have kind of gotten put through the washing machine because the AI sentiment has been torn into two different aspects. Number one, the people who actually believe in the build out, but know that the build out, most of it is coming late 2026. And then the other people who think that we're in an absolute very massive AI bubble right now. And that is why every single one of these news headlines hits really hard, and why a lot of AI stocks just have not had the same momentum that they had in the summer and during the early portion of the fall as well. So in today's video, guys, we are going to talk a lot about this stuff and especially go over many different charts and derive whether or not there are some opportunities to be had in this lack of AI momentum, or whether or not we should be focusing on the rest of the market rotation, which we've been talking about all week. You remember me talking about the big money rotation into the bottom half of the market here, all of the other names that are not directly Mag 7 and that are not directly semiconductor and infrastructure build out. There's been a big rotation, and we covered it in Thursday's video. The title of the video, as a matter of fact, was Themes and Trades into 2026, with the broadening out of the market because of the Fed's guidance during the Summary of Economic Projections released just last week. So today, we'll talk a lot about everything and make sense of everything as well. So in part number one of the video, we'll be going over the technical analysis of the SPY, the Qs, and the rest of your minor sectors. Check on that rotation and see which sectors are moving while a lot of the AI trade is lagging behind. Thereafter, we will go through our big tech list down here because a lot of big tech names now are in very attractive levels. So how can we possibly construct some either long-term portfolio positions or some swing trades leading in to 2026 across all of these tech names right here? At the very end of the video, yes, we will be going through the biggest gainers and losers of the day, because I'm pretty sure you guys are curious whether or not I'm playing some of these names that suffered very large declines on Friday and how we would possibly play these into the rest of the build out, late 2026, 27, and 2028. And also check on a few names that have been performing really well amidst all of the rotation. And at the very end of the video, I'll take you guys through my portfolio and show you guys what trades I have into place for 2026, and also which trades I'm carrying into next week, just as normal short put wheel positions, right? So it should be a very fun and interesting video, guys, building upon all of the concepts we've been speaking about now for the last 3, 4, 5, 6 weeks since we entered this very choppy period of time with the S&P, where the AI trade has been unwinding categorically across the board, and now where you're starting to see a broadening out of market sectors, right? So let's jump right into the action. The S&P down 1, the Q's down almost 2. Take a look at the heat map, though. As we said, more continued rotation. Now, a lot of tech and semiconductors were down massively because of the Broadcom earnings, and also because of, well, Oracle's own earnings previously in the week, but also that article that came out on Friday, which sent them down again. So this aspect of the market was not too good. Additionally, across the bottom half of the market, a lot of names that have been benefiting from the AI build-out, such as Caterpillar, such as Train Technologies, such as GE Vernova, such as Eaton Corporation. A lot of these names, right, industrial machinery plays, they were down because they're associated with AI as well. However, we had some nice gains here in consumer defensives, one sector I was telling you guys to have a look for in terms of the end of the year and into 2026. Some of the other industrial plays, some of which haven't gotten much love at all this year, the bottom half of the market, healthcare and financials, getting some of that rotation. Now, this heat map was a lot better before the Oracle article came out. you were actually seeing, again, another day where it was only big tech and semis down, and the bottom half of the market was there. But then as the day moved on and the mood kind of soured across the board, we started losing a bit of momentum here, even across the bottom half of the market. But you can clearly see, right, there were big winners on Friday. Just depends what you were invested in. Moving on to the one-day relative performance, you can see that even better. Defensives, cyclical, healthcare, financials, not too bad. These were much better to start off the morning, but kind of eroded throughout the session. And then to the downside, technology, a massive 3% decline amidst that sector right there. On the 1 week relative performance, you can see we are still in a very choppy market, right? A push and pull market whereby basic materials, financials, industrials, defensives, healthcare, and cyclicals, the portion of the market that I was saying would get the rotation, has been seeing the rotation as well. And the bottom half, well, unfortunately, some interest rate sensitive names such as real estate utilities, but a lot of other names closely associated with the data center build-out, such as communication services, which I'll remind you is largely Google and Meta at this point. Shout out to Netflix. They were also dropping all week. And then technology, energy, and utilities. So still a very bifurcated market, and you still have to pay attention to that rotation. In terms of the fear and greed index, we are now back into fear. We made it for one day into neutral on Thursday, and now sadly back into the fear environment. And this week is going to be a very crazy week, guys. A very crazy week, to say the least. Take a look at this. On Tuesday, you get everything in the kitchen sink. You get non-farm payrolls for October, but not only that, you also get non-farm payrolls for November. This is going to be an absolutely crazy day. You get retail sales as well. You get the unemployment rates coming out with that. You get the labor participation rates. This is going to be an absolutely wild day. You get S&P Global Manufacturing PMI, Services PMI. There is something for absolutely everybody on this day. It's probably going to be one of the more volatile days throughout the entire week. And then on Thursday, yes, you get the CPI as well. That should be very fun. So this week, everything and the kitchen sink, everything they could possibly throw at you in terms of volatility, they will throw at you. You also have a monthly options expiration on the Friday session. And additionally, on the Friday session, you get the Bank of Japan. The infamous yen carry trade drama will continue into this week and probably end this week with a decision whether or not the Bank of Japan is going to increase their interest rates, putting more pressure on their currency, but also putting more pressure on that good old yen carry trade. So this week is going to be extremely, extremely volatile. If you do not want to trade this week, I do not blame you. There are very high quality companies available to us, especially to write some put options below them, right? But it is going to be an extremely volatile week with probably very large swings in either direction. So just keep that in mind coming into this week. It is the busiest week for the rest of the month of December. And then, of course, on the next 2 weeks after this week is done, will be very flat, right? Because the volume's going to go away. Wall Street's going to go on holidays. You got a few holiday periods in the interim, right? Such as Christmas Eve, Christmas Day, and then obviously New Year's the following week thereafter. So this one is the make or break week for the month of December. And as we're standing right now, guys, if this week is bad, right, it's going to be very hard to get a Santa Claus rally back into the all-time highs. I'll just put it that way, right? If you see further consolidation throughout this entire week, you'll be so far from the all-time highs. And with days that have very weak volume, right, it's going to be wishful thinking to think the Santa Claus rally can put us back towards the all-time highs overall. So just be careful overall this week, guys, right? And let's get into some charts right now. So in terms of the S&P, in terms of the index portion of the video, right, S&P falling, obviously, right? The clearest one here is the S&P futures chart. We're going to be looking to see, can the bulls hold these higher low levels? We almost breached it on Friday, almost. If you lose these guys, sadly, you do lose the daily uptrend. It's been 2-3 weeks of very nice price action overall. But if you lose this area, very simple, guys, very simple first principles analysis, right? If you lose the daily uptrend, well, you're going to daily consolidation and you're going into weekly consolidation as well. But if a double top right there, it doesn't mean that you're going to go do this. No, it just might mean you have to revisit, right? And we were talking about this the entire time for this bounce. Normally, when you have a nice weekly uptrend and then you get a 100% retracement to where the bulls lose all momentum, it's very tough to get the strength and energy and momentum to completely reverse a 100% engulfing move like this into a pure V-shaped all-time high breakout. Sometimes, if the bulls get too tired or shut down by some catalysts, sometimes they have to gather a little bit more momentum and reestablish this trend in 2 different legs. So we'll be taking a look at that and see if that happens. We definitely have the volatility catalysts during this week to send us into support on the SPY, which would be 674 down to 665. We're not trying to predict right here. We're just trying to ascertain, does this week have the juice to push us down into support with more volatility and especially some weakness surrounding big tech, some weakness surrounding your previous market leaders, such as the AI trade? Absolutely, right? And even though the rest of the market is kind of there rotating, it's not as big as this trade right here, right? So you will need continued participation from the rest of the market if you just don't want to fall off an absolute cliff. You know, Friday would have been a much worse day if it was broad market weakness. I'm sure everybody would agree, right? So just pay attention to that as well. It would not surprise me this week if you do get the follow through to the downside right there into our support range. And at that point, as I said, we're just looking literally for weekly higher lows in around this 12 EMA. And even if we undercut that a little bit, it wouldn't be too bad. In terms of the monthly time frame right now, still a lot of time left in the month of December. But if you curl a little bit lower, guys, we've been talking about this since the month of November, right? The door is open right now. You have all of the short-term bearish narratives at play. Yes, we have very nice bullish tailwinds, which, by the way, the Fed reiterated during their summary of economic projections. Good GDP projections, decent unemployment projections, decent PCE projections, which were lowered from the September meeting as well, and a similar federal funds rate cut path overall. That being said, these long-term bullish tailwinds, guys, they're not going to help you in the short term, right? Long term, yes, these will prevail. But this AI weakness, the push and pull in terms of sentiment, and possibly another poor labor report or 2 coming in terms of the Tuesday session, right? Well, and the yen carry trade, these are all very, very large catalysts for the short term. So if the short term catalysts take over and we get sent for a little bit of a monthly consolidation period, right? It would not be surprising, especially through the early stages of the month of January. So I'm not trying to predict that. I'm just saying they have the juice to do it. So you should not be surprised if they actually do it. These markets move in waves. And I'm pretty sure everybody wants to just see this, sequence of 7+ bullish months in a row, just move higher and higher and never revisit the 12 EMA. But that's not very sustainable. Many times in the context of bull markets, this was the tariffs, by the way, many times in phases of expansion, right? You can even go back to the prior 10-year period. You get several times where the market pulls back close to the 12 EMA. We are still somewhat extended. Yes, we did pull back close to it, not very close, but closer than all-time highs, right? To the 12 EMA, but you would not be surprised. So they have all the juice in the tank if they want to do that. But additionally, right, if these news reports come out very bullish and we see further sector rotation and a little bit of recapture of bullishness in tech, well, you also have the juice to just set these established lows right here and start moving a little bit higher into January overall. So the door is open either way, but whenever it gets a little bit uncertain right now, you guys know how I kind of proceed, right? It's just a question if you're trading to raise capital, right? Raise buying power, or just play very high quality, very high conviction names that have been coming down recently, right? And there are many, but in the event that tech is not your thing, we've been talking about so many different names, especially on Thursday, right? So many different names and sectors which have done nothing over the course of this entire year, which could be very attractive opportunities coming into early 2026. So if you're not a fan of tech, if you're not a fan, if you believe that the AI is a bubble right now, right, there are several different names and several different sectors, and we'll start covering them as we move through this index analysis right now. Moving on to the QQQs right now, QQQs down 1.91%, and the damage is done there as well, right? So sadly, going for the full daily unwind, daily retracement right now in terms of 613 down to 605 is your most recent area of support, challenging the 50-day EMA once again. And on the weekly timeframes as well, right? Same concept. You had a very nice weekly uptrend, right? And then we got a massive engulfing move. And I was saying, guys, you want the bounce size to be very good. And the bounce size was indeed very solid on the QQQs. That was a 78% retracement. So the bulls created a lot of space off these lows to eventually set new higher lows and go for the trend recapture, as here the momentum was also largely lost. So that being said, if you come into the 12 or even a bit deeper, the bulls have a lot of space, guys, to establish either a tightening range and then go for it, right? Or just go for the two-step expansion right away. We're not trying to predict that this is going to be the end result after this week and into January. No. Arguably for that, you would need to not have these strong bullish tailwinds of strong GDP, further possible rate cuts into 2026, relatively low unemployment still, relatively low-ish inflation still, right? Although it is sticky, it's not 4% inflation anymore. You have strong earnings and strong earnings guidance as well. You do have the AI megatrend, which some people are calling an AI bubble, but it is contributing to a lot of spend as well and an economic expansion, right? A ton of tax cuts, and additionally, I don't have it on this list, but I could pencil in the end of quantitative tightening and the beginning of the Fed buying treasuries in the open market to the tune of $40 billion per month or something like that, right? So there are a lot of bullish tailwinds. So you have to be open to either of the opportunities, right? Any dips, in my opinion, are still for buying, but you can't assume that there won't be any dips if you give them all the juice to run to the downside and shake everybody else and create the narratives, create the bearish sentiment, right? So that being said, that's everything for your QQQs. Just do not be surprised this week, guys, if they can send us lower. Good thing for us, there's a ton of opportunities, and I'll show you the sheer amount of opportunities that there is in tech right now. It's quite staggering. Moving on to financials right now. Financials, very nice breakout, right? Extremely nice breakout by financials after that rate cut event by Jerome Powell and the summary of economic projections. Beautiful daily uptrend, and now tons of space for consolidation if we need to. 5330 is your most recent higher lows, looking for a new higher low for possible further trend continuation. Financials, tons of space, looking very, very strong right now for the good old breakout expansion. And if they want to give us a back test, it could kind of be last chance to dance for a lot of these corporations, guys. I mean, talking about Visa, look at the trend change attempt by the Visa bulls, right? You do not see a 6+% day on Visa, often throughout the year, right? Matter of fact, the last time was when Trump paused the tariffs back there. But Visa is a company that usually moves at best 0.5% per day, at very best 6.5%. They're going for the trend change. If they give you the back test, nice re-entry opportunity for some swing trade longs into 2026. MasterCard, the exact same concept. They're going clearly for the big trend change. You do not see this type of move if institutional money is not involved. This stock has largely done nothing for an entire year, just like Visa. Stocks like SPGI, stocks like Moody's Corporation as well, have not done anything all year. Stocks like PGR, a lot of the insurance companies have not done anything all year. If anything, they are down. So whether it's this one, whether it's stocks like Allstate, which haven't moved at all, insurance could be quite interesting leading into 2026 as well. I know these are not AI, these are not tech names, they're not very sexy, right? But if you're looking for the rotation trades, they are indeed here, so pay attention to them. Moving on to XLV Healthcare right now, not too bad of a bounce, right? But we know that we kind of lost our daily uptrend a little bit. So since we've lost it, just like the S&P, right? This much of a retracement size is very tough to just V-shape like this, right? Either it's going to be a two-step recapture of the trend, or the bears need a little bit more and they'll want to go for the full daily downtrend, full retracement. I'm open to either way, but I would prefer if we do get a back test down here into the whole 148 down to 144 region, it would just look all too perfect, right? It would be the very nice monthly downtrend into engulfing move, the breakout, the retest down here of your EMAs and resistance support, and it could provide a decent re-entry opportunity for some swings into 2026 in either the healthcare ETF overall, or if you're looking for some pullbacks in your favorite healthcare names, well, this might just be an opportunity that you would be interested in if you are once again looking to participate in the broader rotation trade. Because we know healthcare, guys, let's be honest, has it really expanded at all in the last 4 years? No. So we could be looking to other sectors for some expansion into early 2026 because there's a vacuum, right? Especially for tech and AI. I'm not saying tech and AI won't perform very well, right? They can possibly still be the market leaders, but will it be a period like September and October where they could do no wrong and the market was just pumping these tech names and these semiconductor names and all that good stuff? Well, it might not be that, you might not get the same degree of momentum for a while until you solve those short-term AI narrative problems. So keep that in mind. Moving into semiconductors, right? So semiconductors, huge day, 4.52%, but don't say I didn't warn you, right? This was very clearly on the table for any portion of news, right? That being said, guys, huge bounce off the lows, right? But it's a very extended bounce with many little gaps in between. That being said, right, it's very tough, man, to V-shape a big weekly drawdown like this. Sometimes, right, you need to do it in a couple steps. So that being said, they're looking for the higher lows, anything above 315, looking for a higher low, support down here, 343 down to 325, looking for the new higher low, possibly to reattempt the daily trend change, because they never changed the trend. All this was a very nice streamlined bounce. Now you have to give me the overall trend change, right? So that being said, if you come back into this area, a bit more consolidation could be maybe interesting to be looking at some of your favorite semiconductor names that are not on the moon right now, right? So keep that in mind. We'll cover a few in today's video, but even if you come down, right, we've been talking about this. They've been very far from the 12 EMA this entire time. And I have these AI concerns specifically on the SMH chart to say that it's a reset of expectations. We talked about this over the last 2 weeks, right? So nobody would be surprised if semiconductors consolidate a little bit, especially after Broadcom, Oracle, and just the lack of follow through on NVIDIA and AMD and so many other semiconductors out there, right? Would anybody be surprised at this point if we actually go for the 12 EMA backtest? Just wait for it to casually curl up, and December is a bit of a non-factor. Maybe even January is a bit of a non-factor. No, you expect some of those things sometimes, right? It's been a very nice last 6-7 months, but to expect this semiconductor ETF to just push and push and push and push and get an ungodly amount of distance away from the 12 EMA is just not realistic sometimes. Even in the best of bull markets for semiconductors, you can see the bulls hesitate a little bit before embarking on the next stage, and they'll often provide you opportunities, if not close to the 12 EMA, directly at it. And unfortunately, right now, we are still very extended, so please keep that in mind. Moving on to the Russell right now. The Russell down 1.53% today, or on Friday, excuse me. Daily uptrend is very nice, but notice these legs are getting smaller and smaller, right? So 3 legs up, maybe time for a little bit of a wave down here. The support, well, not actually, so the daily higher low right now is about 250, which is, I mean, I'll give it to them, right? It is the previous all-time high area of support, yeah? So that being said, in the event that this is indeed the short-term top for the growth names here, and we unravel this into a daily downtrend, just understand what's going on. You're going for the weekly higher lows, right? We lost the weekly uptrend. The bulls have a nice engulfing move. Now you need to get the weekly uptrend back. So in the event you do come a little bit lower here and you breach the support range, possibly the 12 EMA all the way down to about 240 will be a nice back test area, get a bit more strength, and maybe go for this into 2026. I'll remind you, this IWM Russell is not a whole bunch of unprofitable tech companies. No. There's a lot of healthcare companies in there, industrials, financials, especially small and medium regional banks and things of that nature, right? So as the market broadens out, that's actually good for the Russell overall. Now, the thing that's carried the Russell recently has not been small cap tech. As a matter of fact, it's been this one right here. It has been the small and medium regional banks, which have seen very nice explosive growth here over the past 4 weeks. They've been the major contributor to the Russell's performance. Now, moving into some boring sectors, but some sectors that we have to speak about, right? Consumer staples. We were talking about this at these lows, saying it's very rare for the consumer staples ETF to tag the 200 weekly moving average. You know, usually that only happens in times of big uncertainties, such as tariff episode number 1 and 2 in 2018 under President Trump, the COVID pandemic. Then you also had the end of the 2022 bear market. Then you had the fall of 2023, where inflation concerns became, came front and center again. So only in times of great uncertainty does it ever do that. And it tested it here again, arguably not in times of great uncertainty, at least not for consumer staples. I mean, you can make the argument that consumer discretionary spending has been poor, right? But still, we didn't even hit that level during tariffs this year, right? So to say that consumer staples were in a worse position than during, a 6-7% inflation era, or at least close to that, those were the fears at the time, right? Or a big bear market or a global pandemic is somewhat debatable, right? So that's what I'm talking about by saying, watch the rotation, previous resistance, big current support, and now you're getting a little bit of lift here by the bulls. Additionally, so many names in consumer staples, guys, have been hitting 52-week lows this year and just have not done anything. I mean, take a look at Procter & Gamble, right? Procter & Gamble has done nothing this entire year. If anything, to just keep losing ground, losing ground, losing ground. So many names like this. We can reference like Clorox as well, completely destroyed. Take a look at Colgate, Palmolive. They just basically given back. They've done nothing all year, right? This is the top September 2024. They've done nothing all year. There's so many names, and even a name like Costco, right? Costco's done nothing since the peak here in May. Now, the valuation is slightly elevated, as we talked about after their earnings, but still, so many consumer staples names have done absolutely nothing, and which is why you're starting to see some people rotate. Maybe some of the AI and tech gains, not maybe you guys, but a lot of the institutions, right? They're starting to see value here in some of these sectors that have just not done anything for the past few years in terms of expansion. So watch for it. It's a huge level right now. Still a very nice theme, in my opinion, into 2026. If you believe this summary of economic projections, and you believe we're not going into a recession, GDP will be healthy, the unemployment rate will be healthy, and inflation will come down over time, this is one of those trades that would follow that narrative. So keep that in mind. Another trade that will follow that narrative is XRT, consumer retail overall, right? We know so many consumer retail names this year have just been beaten to hell. Talking about names like Chipotle, talking about names like, Nike, but although Nike has in its own execution problems and things like that. Names like Kava, names like Cheesecake Factory, or things like that, sit-down restaurants like Texas Roadhouse. They haven't done anything, literally anything all year. Not only that, though, other apparel names, such as, let's say, for example, like Decor Outdoor Brands, excuse me, that's not Decor Outdoor Brands, Decor Outdoor Brands, so many names got destroyed during tariffs. But additionally, right, this entire narrative, and even Lululemon or things like that, right, this entire consumer retail segment, arguably, guys, has not done much, not only this year, but even in 2024, right? You remember it all started unraveling in 2024, the consumer discretionary spending worries, and it's carried into this year as well. So a lot of names here in terms of consumer retail have really been struggling. But you know what's funny is that a lot of these names have been slowly coming back. Look at the dollar stores, Dollar General, DLTR, like huge recoveries on these. Even names like Estee Lauder are now off the lows, things of that nature, right? Just consumer-facing stocks, right? You don't need to look too far. We're going to be maybe looking for a bit of an upswing here in names like Whirlpool or anything close to consumer retail overall. Keep an eye on it, guys. Keep a very close watch on it. Names like American Eagle, they've been performing really well, of course. Names like Abercrombie and Fitch have been coming off the lows, right? So all the names that have just gotten destroyed this year, surprisingly, have been performing the best over the course of the past month and a half, as there might be a little bit of institutional rotation. And you can clearly see, right, this XRT ETF, well, it removes the impact of XLY, which is a massive impact because of Amazon and Tesla. Amazon and Tesla are literally like, I think like 30% of this entire ETF. So it's not a very fair view of the full consumer retail landscape, right? Because of how overweight Amazon and Tesla are in there. But additionally, right, XRT is a bit more balanced. No position is more than 2%, if I recall correctly. There's more balance. It gives you a better bird's eye view of what's happening here, right? And they're going for the monthly breakout. After doing literally nothing for the past 2 years, right? They're finally going for the monthly breakout. So this additionally could be something to consider into 2026 as a theme. Talking about utilities as well. Utilities has been strong all year, but right now what they're doing is they're going for the full monthly retracement, possibly down to the 12 EMA. Now we're kind of battling right now with our last line of defense support, beyond which we do come down there. I'll leave the circle here, and that's literally exactly right below the 12 EMA. Have utilities been a good buy every time we come back to the 12? Yeah. Can we slightly undercut the 12? Sure, but only in times of great uncertainty like COVID or the 2018 tariff cycle, or, some certain elements of the bear market of 2022, of course, into 2023. But overall, in the context of a bull market, utilities usually a good pickup when you come around that 12 EMA, whether you want to play this one directly using the ETF, or if you want to do some data center specific names, like such as Duke Energy coming down to support right now, names like Constellation Energy, CEG, for a retest down here, 325. Names like, let's say, Vistra as well, very solid name as well, into this whole support range too, all the way down to about 160. So there's a lot of utilities names that have been coming down either over the course of the past 1 or 2 months, which could be interesting either to be played through the ETF directly, right? Or individually if you want a bit more direct data center niche exposure overall. So keep that in mind. Utilities could still be a very good theme into 2026 and 2027, as we know the power requirements for this AI stuff are extremely large. Moving on to real estate. Real estate as well is another sector that's done absolutely nothing. Absolutely nothing, right? But a lot of these names will have a lot of benefits coming into 2026 and 2027 as we embark further and further into the rate cutting cycle. Now, obviously, this trade is once again predicated on the no recession thesis. If we just think that there will be a soft landing and that the Fed will be able to thread the needle and cut interest rates progressively, and also President Trump's push for affordability into 2026 as well, and also massive tax cuts too, well, maybe the consumer will eventually regain its buying power, have lower interest rates, and as a result, maybe some of these sectors in the real estate market, such as mortgages like Rocket Mortgage, or maybe some of the home builders like SHB and names like ITB as well, like these ETFs, the home builders, right? Maybe those could be decent opportunities. The REITs, they'll need a bit more time for refinancing. But additionally, some of the REITs, man, like, I mean, Vici, look, multi-year support, right? A lot of these REITs too, real estate into 2026, 2027, 2028, they have done, a lot of these REITs have done nothing throughout this entire interest rate hiking cycle. Now that we're into the rate cutting cycle, maybe it could be a nice area to accumulate if you enjoy this style of company. I'm not trying to push it, but what I'm doing in today's video, guys, is just showing you, right? There's something for everybody. Trust me, at the end of the video, we will get into all of the crazy tech names and the crazy AI names, and I'll show you how I'm going to play those as well. Of course we will, right? But there is something for everybody in this market right now, depending if you know where to look. And lastly, energy, which we rarely cover, but I figured it could be noteworthy to cover as well. 45 down to about 42 is the area that we have done nothing for the past 3 years, right? Now, I'm not a fan of all energy companies. You guys know me. I don't really play oil and gas that much, but pay attention to some natural gas companies which have exposure towards the data centers, such as, well, a company like VST, right? Just pay attention to some of the companies because natural gas will be widely utilized. So within XLE, am I playing the legacy oil companies such as Chevron and things like that? No, but will I be playing certain localized businesses with good geographies that are close and serve the data center trade over the next 1 to 2 years? Possibly. So this is a theme that I want to be building more and more positions into 2026 and into 2027. Start talking about the power, because this year, guys, has been all about the infrastructure, right? The chips, the memory, the cables, right? The networking components, all of that stuff. The semiconductor equipment manufacturers like LRCX and ASML and AMAT and KLAC. It's been a whole bunch of this. Phase 2 is possibly currently upon us. The energy companies, some of the construction companies, as we know that most of these data centers will have heavy construction timelines over the next 2 years. Now the money has been spent. Now everything has to kind of get put together, right? The chips are all on back order. The equipment is all on back order. All that stuff is arguably somewhat more priced in than not at this point in time. But a lot of other sectors, such as the energy component of the AI trade, a lot of the energy component of the AI trade, arguably still hasn't ran to the extent that it possibly could run. But additionally, software, pay attention to some of the software winners coming into 2026 and 2027. Those are supposed to be some of the beneficiaries of the AI productivity gain. So we might be embarking into phase 2, where next year, I don't know, right? This is just a thesis, but maybe next year, well, maybe we get some more broad market rotation into everything else because of what the Fed gave us as in terms of projections for 2026, namely some more consumer-facing names. But also for AI trades specifically, I'll be focusing more on software components and possibly energy components. I'll still have some of my legacy tech names. I'll still be playing some of the data center build-out names as well, yes, but I'm going to start putting more and more emphasis on some of the energy players associated with this build-out overall. So hopefully that makes sense. That's everything for your overall market rundown in terms of the indexes. Hopefully you guys enjoyed that. I spent a lot of time on this the past 2 videos, Thursday's video and tonight's video, but I think it's going to be important. But trust me, I won't do this every single video, right? I'll be referring to these videos in the future, and then moving on into the future, we'll just kind of do some rundown and kind of trim down on the context, because I know you guys love context, but I can't repeat the whole thesis every single video, you know what I mean? So I'll just take for granted that a lot of you guys now know the thesis, are aware of the rotation, aware of the themes into 2026. So let's get it, guys. Moving on further here into the VIX. Well, the VIX could see a nice week here in terms of appreciation. Am I playing VIX longs? No, I don't usually play the VIX. Just something to pay attention to, though. If Tuesdays, Tuesday through Thursday, right? If you get massive uncertainty because of the economic releases, and then into the Bank of Japan day, you could possibly see a big upswing in the VIX, which would translate to looking for higher lows in the markets, right? That would translate to your weekly consolidation on the SPY, your weekly consolidation on the QQQs overall, and a massive upswing on the VIX. But because of everything that I said in Thursday's video and today's video. I do want to be a buyer, but I'm going to be using specific tools, right? If we see a big uptick in the VIX, you guys know what I'm doing. I'm going to be selling put options on my favorite companies well below the market prices at that time. So I'll be using the volatility to my advantage, not panicking, coming to this week with a plan of companies that I would like to write some short puts on. And I'll give you guys those companies, some of them in today's video, but obviously tomorrow, the regular top 5 options plays on every Sunday, man. So pay attention to them tomorrow for sure. So we'll see what happens with the VIX this week overall. Moving on a little bit further into gold right now. So gold, I mean, nice day of action here on the Friday session. They were a lot higher, but you know, gold has been kind of acting more and more like gold, right? This is gold not acting like gold. This is gold kind of acting like a tech company, right? But now gold is back to somewhat normal appreciation curves overall. So the daily bulls remain in control. The higher lows are now still set at about down here about 4170. So any move lower looking for a higher low, possibly for further trend continuation. It's just been a very slow and methodical uptrend here since the bulls kind of just took over after this big consolidation phase. So not too bad right there. No swing trades for me active right now, but I mean, longs, you haven't really lost the weekly uptrend so far, right? We will see if the bulls can make quick work of these all-time highs and capture the 4,500 ever so elusive psychological level overall. You are weekly overbought conditions. You are monthly overbought conditions as well. So starting an absolutely massive position up here, arguably the risk reward isn't there. However, the bulls remain in full short-term control, so please keep that in mind. Now, moving into our Bitcoin trade. So Bitcoin on the Friday session, obviously dropping with the rest of the market here, especially the high risk reward names, right? So Bitcoin about a 2.5% day. The higher lows are still down here, 87,750, guys. Pay attention, man. The bulls have tried and tried and tried. If you unwind this and you lose a daily uptrend and go into a daily downtrend, guys, that's it, man. This will officially probably be a bear flag. It looks like a bear flag. It smells like a bear flag. It feels like a bear flag. Trust me, if any of this macro data comes in underwhelming and the SPY and QQQ, you know, also have an underwhelming week, well, you guys know what's going to happen, right? They're just going to continue this weekly downtrend. We can't get above this area, right? It's been big resistance in the past, right? This was support, resistance, and now again, they're using it as a big resistance zone of price action. So please keep that in mind. If you lose your daily higher lows, guys, it's not going to look very good. And in terms of the size of the bounce, let's be honest, was very soft, 38.2% bounce on the weekly. So we keep saying, right, the bounce is only alive if you keep the daily uptrend alive. If you lose the daily uptrend, that's the end of your weekly bounce. And as a result, you measure the size of the bounce once you've concluded that that's the end of it, more likely than not if you lose the daily, right? And as a result, if the bounce is too soft, couple that with resistance, you may just be heading for one leg lower, maybe a retest of these lows, 80,000 or below that. You got the mid 70s down there. So Bitcoin is a nice swing trade opportunity. No, I'm not doing any short-term swing trades on it. Matter of fact, the only swing trade available to you guys was, we talked about this one down here with the stop loss below there at that point, right? So please keep that in mind. At this point, arguably your stop loss should now be newly down here, or at least break even from your possible entries, right? But it's not looking the best for some expansion right now on Bitcoin. I'm not going to try to predict. I'm not going to try to anticipate too much. I'm just here to say, this week, do we have the juice to unwind this trade and fulfill the weekly downtrend continuation prophecy? Yes, we do. But it's going to be a big macro week. If all of these macro economic releases do really well, of course, Bitcoin can just move higher, right? It's all about protecting these lows. So keep that in mind. Ethereum, largely the same concept, but the daily higher lows are down here, 29.13. Nice daily uptrend still by the bulls. They're looking to keep this one going. In terms of the weekly bounce right now, the weekly bounce got a decent level, better than Bitcoin, right? 50% retracement. So the bulls have some room, right? If they were to lose this overall, okay, we have some room, right? It's not confirmed that we're going to continue the weekly downtrend. You got some room on Ethereum to set new higher lows and go for the trend change, but we'll take this one day at a time. Not going to get ahead of myself. Bitcoin and Ethereum, long-term buys, like accumulation buys, no problem at all, but short-term is going to be very volatile, of course, leading into the end of this year. And on the monthly time frame, you can clearly see, right? We're battling right now. It's a big battle. Nice support range, big prior zones of price action overall, and that simply continues at this point. The bulls haven't lost the monthly. We are still trying to establish higher lows on Ethereum and on Bitcoin as well. We are still trying to establish higher lows, although we've lost a lot of ground on both of those names, right? It's going to need a better risk-on environment. And right now, we just do not have the risk-on environment. If anything, we have a rotation to somewhat risk averse sectors, right? Or sectors that just haven't participated, and constant rotation away from some of your more risk on sectors overall. So please keep that in mind as crypto will now move with the overall market. It's just tied into that landscape. Now, moving on to our big tech names. Okay, so we're going to run through the big tech names a little bit quickly because you guys know where we stand on these ones. They haven't changed that much. So we'll be once again running through whether they're good opportunities for long-term portfolios, buy, hold, sell type of thing, or whether or not they're good for some swing trades. Number one is Apple. Apple holding up really well above the support range, 275 down to 267. We are still in daily consolidation right now. There is a short-term swing opportunity, but it's a very greedy trade. Stop loss below here, and then you'll be targeting upside 300 as the target. Decent risk reward profile right here. Just looking for continuation by the bulls. However, what do you guys think, right? If the S&P, 2-to-1 risk reward, if the S&P and the QQQs go into big consolidation, do you think Apple's going to hold up? Probably not, right? That's why I say it's a very greedy trade here. And also the time frames are extended. The weekly is a bit overbought. The monthly is very far away from its own 12 EMA. So that's the only swing trade that I possibly see on Apple in terms of long-term positioning. Not long-term positioning up here. We're too far away from the monthly 12 and the valuation is too extended for me. So that being said, I'm not adding to any long-term portfolio shares, but I am holding my Apple shares. I think they will have a very decent Q4 earnings release, which they will publish into January. So keep that in mind. Moving on to AMD right now. AMD down, obviously, because of all the, the AI drama recently, right? And we know the bulls were getting a little bit tired right here. It wasn't the best bounce. And we were talking about 212. They cut 212. That's the end of your daily uptrend. Now, daily downtrend. And as a result, that's the weekly lower high. That being said, size of the bounce wasn't that great. And we're talking about this, right? It was a nice weekly uptrend this entire time. And then we started unraveling the OpenAI narratives, right? So in the event you get further consolidation, guys, I just want you to anticipate what could possibly happen here. The retest down here to 190.175 is open. The door is open for them to do that right now. I'm not saying they're going to necessarily do it, right? We could very easily just reset the weekly uptrend from here, but you have to be open to that possibility. So if we don't know, there's an order type for whether you don't know they're going to get down there, but if you still want to make money and you want to buy shares down here, it's called a short put option, right? To where you would be writing the 190s if that's where you would like to or wouldn't mind being assigned. And if it doesn't get down there, you just get to collect a whole bunch of premium. That being said, it is still monthly consolidation for this stock, right? Beautiful monthly uptrend. Monthly consolidation, though, is very natural. And at this area right here, we'd be lining it up perfectly with the 12 EMA. I'm still very bullish on AMD. I think they'll be having a beautiful 2026, 2027, 2028, as the thesis is still largely intact. That being said, at 200, the valuation is also really good. So this is indeed an area that I do want to be playing as a pocket for short put and even adding some shares potentially as well. Moving on to Amazon, good old Amazon, right? Amazon just struggling, not doing much of anything. Daily downtrend, nice bounce. And we were saying the bulls looking for the higher low and going for the trend change, but they've been battling with this resistance, guys. 240 down to 227. Sadly, we are almost undercutting right now. If you lose this, guys, sadly, you lose that attempt, and it looks like the bulls will just have to consolidate a little bit more. We've been trapped in this area several times, guys, especially, all the way from June through where we are right now, right? We got the breakout through earnings. Wasn't good enough, too little, too late. The entire AI trade and all the big tech stocks started unwinding hard, and Amazon kind of just followed suit. So that's good if we're long-term buyers of the stock. I know it hasn't really done much this entire year. However, what they have been doing is improving earnings this entire year. Stock price hasn't been moving, earnings have been improving, which means the stock's been getting cheaper and cheaper as it just moves sequentially sideways. Around 220, the valuation is still fair, 28, and a 1.4 peg with beautiful earnings and great guidance into 2026. So I will be playing short puts down here towards support and also continuing to accumulate long-term shares in Amazon, as I do believe, guys, they'll have very nice years, 2026, 2027, 2028. At least that is the forecast for expanding margins, expanding free cash flow. All the analyst price targets clearly above the share price right now. EPS, big expansion, and revenue, big expansion as well. So Amazon will be one that I will be adding to. Moving on to Google right now. Google continuing the daily downtrend. We were talking about this, right? You lose the 12 EMA right here. It was daily overbought conditions coming there. It's been also weekly overbought conditions. Google very rarely gets to an 80 RSI on the weekly, and every time they have, that has been synonymous with some form of a local top. It's not me, it's the charts, right? Every time, just go use history, right? That being said, Google is a very strong company, and I love the stock, and I keep holding all of my long-term shares. However, there's a time to buy and there's not a time to buy, right? So that being said, at 320, it's a high 28 multiple, a relatively high 1.91 peg as well. And as a result, I'm not trading up here, right? Daily downtrend, weekly overbought conditions, very far extended from the 12 EMA. I need a pullback. Similar to other stocks like Microsoft, when we got up here, I wasn't buying anymore, waiting for the pullback into the 12. And people never think it can happen, but sometimes it does, right? Microsoft did it. Netflix was all the way up here. Everybody wanted it after tariffs, right? And I was saying, no, I'll be patient and wait for the 12th of May. If they don't give it to me, no problem. I'll hold all my Netflix shares. I won't buy anymore until it does it. Well, Google is now the same concept for me. I'll hold my Google shares for my long-term portfolio, but I'm not adding any up here. And now neither am I swing trading this one with short-term call options. That's very, very greedy, right? Weekly overbought, monthly super extended, very, very greedy long up here on Google. That being said, if we consolidate a little bit more, where could we maybe be heading? Down here, 290 to about 275 area of consolidation. It's not much, but it's the closest thing we have. And the weekly 12 EMA down there as well. So we will see if Google is able to cool off the price a little bit. But definitely, I'm not really interested in doing anything up here on Google. If we are swing trading shares, though, now, and I've been saying this for the past 3 weeks, now is a very good opportunity to, if you are swing trading shares and you had them from down here, well, there's so many other opportunities in tech right now that maybe it's a good time to pivot some Google gains into possible other names that haven't rallied as much. Although Google is very solid, there are many other great opportunities in the market, such as this company right here, Meta. Now, this candle is fake news. It's a fake print. I don't know why they printed this price on Meta, but Meta really never got up there on Friday, right? They just kind of came down here. 650 to like 640 was the trading range. So forgive this candle on TradingView. I don't know why it got printed right there, but Meta is currently still right now in a daily uptrend, right? Higher lows are right down here, about 635. If you lose that, sadly, you lose it. You open up the door for the daily downtrend. We're at support right now, 645 down about 630. And it's not a very strong area, right? It's just the closest one we have. You know what I mean? A bit of consolidation here, a bit of consolidation there. It was the top end of the trade right there as well. So it's not a huge one. Nothing like this one down here, 600 to 560, but it is something to pay close attention to. All you need to understand, though, if that's confusing to you, is the weekly. It's been a weekly downtrend this entire time. We had a nice bounce on the weekly time frame right here, talking about a 50% bounce. So now the bulls will have to do their best to get the weekly uptrend back. Until the weekly uptrend is back, you cannot say the monthly lows are fully settled just yet. You can very easily, if the SPY and the QQs unwind, you can very easily unwind most of this bounce and revisit down here. That being said, I will be selling some put options on the big account down here if we once again revisit it. And additionally, at 630 or lower, I will just keep DCAing some shares that I want to hold for the long term because the valuation on Meta is good. Low 20 multiple, 1.6 peg, not too bad overall. Moving on to the Microsoft situation right now. So Microsoft as well, right? Very soft. Rejection from resistance, 501 or 500 down to 489. There's a big level, right? Big support as well, and now used as resistance twice. So keep that in mind. The bulls tried to go for the daily uptrend, got rejected, and revisiting these lows. If you lose these lows, guys, 475, that's it, right? Daily downtrend back underway. Weekly lower highs are set, and you're just going for another leg of weekly selling into maybe a key structural level of support, which is 450 down about 430 overall, the previous highs of all of 2024. However, with much better earnings. Company's been building better earnings this entire time. Don't take it from me. Just go see what they've been doing, right? Have they been increasing EPS every single quarter? Yes. Have they been increasing revenue every single quarter? Yes. So if you revisit some prices from last year with more earnings and more free cash flow, well, less free cash flow because they're spending money on data centers, of course, but you guys know what I mean, right? Higher cash generation rates. Well, it'll be a very nice opportunity, which is why on Microsoft, I've been playing this pocket from the 12 EMA down to 450, selling some put options down here, not the worst opportunity, or DCAing some Microsoft shares that you want to carry forward for your long-term portfolios. Microsoft at 470 is now below a 30 forward multiple, and down to 450, this will turn in very quickly to a 27 forward PE and a 1.5 peg, roughly, right? So that being said, these are traditionally good locations to be buying Microsoft on a fundamental basis, especially when they've been having very strong earnings. Moving on to Netflix right now. Netflix trying its best to enter a bottoming out cycle. But of course, this one is going to be news driven. If we get more headlines from the whole Warner Brothers Discovery situation overall, right? well, of course, then you're going to get more drama and more volatility in this stock. But Netflix just recently hit oversold conditions. We are into our biggest area of price action that we've had recently, right? This whole 100 down to about 90. If for some reason we take this one out, we're going right down here, guys. 85 to 82 is the next area. So that being said, the daily bears are in full control right now. You need to see a nice bounce and a recapture of the daily uptrend if you want to specifically say this weekly leg is done. And then you'll be looking, well, how much can the bulls bounce? Maybe reverse this. And only then will you know this is the absolute true lows of Netflix. So since we don't have any of that, we can't really say these are true lows. So what am I doing on Netflix? Long dated positions only, namely under $100. I will DCA some shares into Netflix that I'm looking to carry into the next 3, 4, 5, 6 years because I really enjoy this company, right? Additionally, as well, into the 26 in the context of bull markets, you've usually had some good opportunities, man. Every time they pull back to the 26 in the context of a bull market expansion cycle, it's usually been a good opportunity. Also now trading at a 1.54 peg, which is very fair for this company with really solid earnings too. It's just the Warner Brothers noise has been bringing down the stock a lot. So you're going to have to get through this noise, especially if you're establishing longer term positions such as leaps or such as long-term shares, right? Moving on to NVIDIA right now. NVIDIA as well, man. Too much noise in AI right now to see NVIDIA expand right now. Too much push and pull. That being said, they tried their best to go for the daily uptrend expansion, get beyond this infamous 185 region, which has been like a magnet, man, for this stock, right? Both trying to move through it, then back into it, right? They try to pull up higher and they get pulled back down to this area. And they really hug this area a lot, right? NVIDIA has done nothing, guys, since July. Absolutely nothing. 6 months of improvements in earnings, improvements in guidance, and the stock price has not moved. Well, that's when you kind of zoom out to the monthly timeframes and it all is going to start to make sense, right? Eventually, you kind of run out of buyers right here, especially when the narrative is not as clear as it once was. So whenever the narrative's not clear as it once was, well, what you're going to get is you're finally going to get your monthly consolidation phase. And we've been talking about this area now for like the past few months, saying watch the pullbacks to the 12 EMA. Usually they're a good time to be looking for NVIDIA if you want NVIDIA. And as a result, now we're getting that. So if you do continue this weakness into the support range, 170 down to 165, I'll be looking for a couple different things. Selling some put options into here because the valuation is good, but also some long-term shares. Around 180 or less, it's a mid-25 multiple forward PE at a 1.15 peg. That's not that high whatsoever, of course, right? And you also have amazing earnings guidance as well. So NVIDIA could be a really nice pickup opportunity if we continue to see weakness here, as their guidance for the next 6 quarters is pretty much confirmed. No matter what the short-term sentiment is, they will be generating that revenue, right? The backlog is there. The contracts are in place. Moving on to Tesla right now. Tesla with a very good week, contrary to a lot of other names out there, right? Tesla, super solid performance. Got to give it to them, yeah? So daily uptrend is in motion right now very clearly. Nice bull expansion. And now they're trying to test the all-time high range of resistance. Again, well, not all-time highs, but actually, wait, no, not all-time highs, 487, but the most recent 52-week high area of resistance. And this one has been a monthly bull flag this entire time, right? Nice monthly expansion here, pull back into support, which was 405 down about 382. They tested that one. The bulls have been defending this area really nicely, and now they're looking to get the weekly uptrend back. We had lost it right here. They're looking to get it back. Any back test down here could be interesting, guys, to play for the expansion leg on Tesla right now. I mean, full YOLO buying right now, probably not in my wheelhouse of preferred trades that I like to do, but the Tesla bulls have been looking pretty good. So 2026 could be a nice year for Tesla overall because we know, guys, we know, right, that Tesla doesn't really move as a car company anymore. I know a lot of people would like it to move like a car company and say that it's super overvalued and whatnot, but what's moving Tesla now is the focus on the long-term vision. Whether you agree with that or not, I'm just here to describe why it's moving like this, right? It's moving because of the advancements on FSD and the projections for robotaxi numbers. It's moving because of the advancements on robotics, right? Optimus and forward sales projections, even though they're very far away still. And it's also moving because of one sector that doesn't get talked about enough, which is their whole solar and energy storage via batteries, right? That has been carrying the business for a while now overall. So Tesla, favorable narratives all around. Maybe not so much for cars, right? But for everything else that Tesla is, an AI company, a robotics company, an energy company, those aspects of the business have contributed to this bullish sentiment surrounding the stock recently. So do not be surprised, right? Oh, and data centers in space. Elon talked about this all of last week. Data centers in space, right? So let's see. Moving on to Palantir right now. Palantir down about 2.12%, but Palantir has had a really nice rally recovery here. Back into resistance real quick. A 185 down about 170 is your resistance range. Daily downtrend, nice upswing by the bulls right now. Really nice upswing. They reclaimed the daily uptrend. Looking for a new higher low, and at least you have all the bottoms here to kind of save you if things kind of hit the fan here. On the weekly, they're trying, right? Very nice bounce. Palantir was a weekly uptrend since April. Yeah. Higher lows after higher lows after higher lows after higher lows. This time was different. We lost it. So now we have to fight to get it back, right? So if you do consolidate a little bit, just keep in mind the fibs, right? You got a nice 618 bounce. The bulls have a lot of space to use this area for a higher low, possibly to go for the trend change. But if Palantir just gets caught up here and stays range bound as well, right? I'm sure nobody would be surprised because of how far they've run ahead of their fundamentals. Now, this monthly sell-off action did a great deal in consolidating here the monthly RSI. But you know what's funny? We went from a 95 to a 76. We're still monthly overbought. So in the event Palantir has to join the rest of the AI trade and the rest of all the names that have been unfavorable recently and consolidate a little bit more, I think it would be the best possible thing that can actually happen to the stock. I know a lot of people just want to see this happen again, but that's not going to happen if the whole AI trade is constantly being, hit by all of these negative news pieces and this push and pull in terms of sentiment, right? Moving on to SOFI right now. SOFI, decent little green day during the course of the Friday session. We did break some of these lows here, and the bulls are still looking to establish the higher lows, right? It was a daily downtrend, nice engulfing move, still looking to establish some higher lows and change the trend. That being said, resistance above is 30, down about 28.5. In the event you go for a full retracement like this, it wouldn't look so awkward, guys. All we're doing here is just monthly consolidation, right? It's just monthly consolidation. They did it once during November. The bulls tried for a nice bounce and they got it. But let's be honest here. On the weekly time frames, right, you see it best. This is just the big old chop zone. The big old chop zone, right? If you really want to see a trending market, you're going to have to do two things. Give me this daily uptrend, which will then translate into a weekly uptrend as well. Okay, then you'll be sure that, okay, we've claimed the big level, the bulls are going for it, the monthly higher lows are set, and we're actually looking for expansion. But the entire time that they stay in the gulag here, below resistance and below support, it's a nice area of accumulation, right? If you're a SOFI bull, you enjoy these consolidation periods, especially if you're DCAing into this one with your paychecks or anything, right? 27 or under 27, it's good. It's like a 1.1 peg and a mid sevens in terms of price to sales. Or if you're running the wheel strategy by writing put options down here, right? Just selling some put options, 25 down to like 23 area. It's been very lucrative for us, picking up a lot of premium down here. And if they come down and assign us, no problem, man. That's my monthly higher low location, right? It's the 12 EMA down here. It's the monthly lows here. It's the monthly tops from there. This would be a very casual and very natural, backtest location again, if they do offer it to us. So that's where I've been selling a decent amount of short put options here over the course of literally the past 3 months. I've been doing this, and it's been a very lucrative endeavor since SOFI has a decent amount of volatility on the contracts. Moving on to the two last ones here. Uber tried to go for the push, man, and now big unwind. And with the big unwind comes big opportunity, because now we are once again back to my key area on the monthly time frame, which is prior resistance, current support. So this is the whole 81-ish down about 74 location between the 12 and 26 EMAs, big prior resistance, current support, and just a very healthy leg of monthly consolidation with good valuations as well. In around 83, where they are right now, low 20s forward PE, a 1.5 peg, 5% free cash flow yield, and very nice expansion of earnings. So Uber could be very interesting as a pickup down here if it's a company that you enjoy, or selling put options down here is also something that I've been doing over the course of the past few weeks as they've offered this opportunity time and time again. So keep that in mind. I mean, we don't have any of the short-term timeframes. The bulls need to do everything from scratch again, just as they did right here, reverse the daily and then get a nice weekly bounce going and try to reverse the weekly trend as well. But so far, the daily uptrend has been lost. The weekly uptrend has never been recaptured. You need to see this, right? So as of right now, we're just playing extended consolidation on this very nice stock. And now moving lastly into TSM. TSM, big down day, 4.2%. They gave you the good old MSOS number right there, 420. Then moving on further here, consolidation. But, you know, TSM has been no stranger to consolidation. We've been through a few challenging periods of time on TSM this year, right? This one was the consolidation from July through September. Kind of awkward, wide range of consolidation with a downward bias. Same concept here, wide, awkward range of consolidation. Tough in terms of price action, right? You had the daily uptrend, got rejected at the all-time highs again, 310 and about 302, and now rejection once again, back into this whole really choppy area of price action. I mean, sure, they're saying the higher lows, right? But on the weekly timeframes, is it really so clear? I mean, they lost the weekly, right? Weekly downtrend of the 12 EMA. They tried to go for it, rejection again. So maybe the best thing that can happen also for TSM is just a little bit of sideways consolidation, just like back here. Consolidate sideways, you cool off the weekly timeframes, you cool off the monthly timeframes a little bit too, and maybe you just embark into, you know, sideways with the downward bias consolidation period as you allow the 12 EMA to kind of catch up in price. And when it does catch up in price, you've seen me play it all the time. Every single time period on this channel over the last few years that TSM has come down to those regions, I started playing it heavy, and also added shares to my long-term portfolio. And they've been very attractive areas to do that in, right? Around 295 right now. Is it attractive for a nibble? I mean, maybe a nibble for a long-term portfolio, right? But it's not cheap anymore. Forward multiple 28.61, forward peg 1.68, which is not bad, right? It's just not objectively cheap, you know? Sometimes when it pulls back to this 12, you get like a 1.4, 1.3 peg. You remember all the times it did it previously? It was a really low peg and like a low 20s multiple. You know, TSM is not like some of the other tech stocks that when they expand, they trade to like a 40. No. Usually it trades from low 20s to high 20s, 30s, low 30s, etc., right? So that being said, I'll be looking for further consolidation on TSM if I'm interested to play, but not interested up here. I'll be focusing on other semiconductor companies such as, you know, AMD and NVIDIA as they pull into their respective levels at arguably better respective valuations than TSM right now. You know, TSM is a 1.68 peg, but NVIDIA is like a 1.1, 1.2 peg, and a stock like AMD down here under 200 is like under a 1 peg. You know what I mean? So I'm just playing the more attractive ones. I'm not saying TSM is not attractive. I'm just saying, is it the best opportunity? No. But is it still a stock that I'm holding in my long-term portfolio that I'm not selling any shares in? Yeah, absolutely. Like I've been holding this one for years and years and years, and I'm still not selling good old TSM. Fantastic company overall. So that's everything for our overall market rundown. Hopefully you guys enjoyed. Now let's spend like 10 minutes talking about the biggest gainers and losers. And the overall theme of this section, guys, especially the biggest loser of the day, is going to be more or less. More or less. Very simple, right? Do we have more AI clarity right now or less than we did before? You arguably have less than you did before in as opposed to like September and October, which were the big boom periods for a lot of these names, right? Names like Oklo, which had a tremendous rally. Oops, didn't mean to do that. Names like Oklo, which had tremendous rallies to the upside during that period of time. Names like SanDisk as well, which had ridiculous rallies during September and October. Names like ALab, which had ridiculous rallies also September, October. And so many other names that had ridiculous rallies, right? Talking about the NBISs of the world, the Iris Energies of the world, CIFR, APLD. You guys know exactly which names I'm talking about, right? All of them. We have more or less clarity than before. Arguably, you have less clarity. As I keep saying, right, this was the big infrastructure boom period where we were signing a whole bunch of deals with OpenAI and with big tech. And now you don't have any more deals anymore in the pipeline, right? Well, all the deals are set in motion, but for when? Late 2026 into 2027. So that being said, now there's a bit of a void in 2026, which opens the door for big uncertainty. So that being said, when there is big uncertainty, well, obviously you're going to see a lot of institutional players and a lot of retail players, especially people who got trapped at the top, right? They're going to start saying, well, this trade is dead. And institutions, well, we know what institutions are doing. They're just seeking value, right? They're taking profits on their yearly gains on a lot of these names and possibly rotating. Not all of them, but we can clearly see a rotation, right? So how do we start playing some of these names, right? Well, you guys know that my favorite time frame is the monthly, of course, and I like to target the monthly 12 EMAs. But not all trades are at the 12-month EMAs. And I'm not telling you guys to play any of these names, right? Play the ones that you are comfortable with and play the names that you know the best. And just focus on the monthly retracement sizes and are we close to the 12 EMA? I'll give you one example of a trade that's not necessarily in AI specifically, but is high beta, such as a name like Rocket Lab, right? Rocket Lab came perfectly into its 12 EMA. And while it was here, I did take a trade with you guys on Rocket Lab, and we have since closed that trade for very nice profits. It came into the 12 EMA after a big expansion period down into the 12, consolidated for a little bit down there. There was a very nice big retracement size, opened up the door for a few key things. Number one, long-term investments, but also number two, depending on the price action when it's down there, right? Shorter-term trades as well. So focus on the 12 EMA pullbacks. Whenever something gets too far extended from its 12 EMA, it always pulls back. Always, always, always. It cannot run like this forever. So if you know names like SanDisk, or well, SanDisk is a bit too early to have a 12 EMA on the monthly, but let's take, for example, a few more, like SMR, right? SMR, this one has no revenue, so maybe it's a bad example, but names like Celestica, right? We're so far. We are so far. You might argue that this name is cheap still on a fundamental basis. You may argue that Micron is cheap still on a fundamental basis, but nothing runs in an absolute straight line. Nothing runs overbought conditions forever. Eventually, you will have consolidation periods either sideways or down and line up with that 12 EMA. If it's too far for a technical trade, then just skip to something else, right? But there's a lot of names out there, such as NBIS. We're coming down into it. You don't need to wait for it to get there. We can obviously sell put options down into there. Even better if you can line it up with, you know, prior support levels as well, right? Names like Iris Energy. We are coming closer to the good old 12 EMA down here in the mid 30s. It doesn't mean it's absolutely going to get there. It just means that if we come close with good volatility, I can sell some put options down there. And if I want to hold the shares or run the wheel on it, this is a much better place to start than all the way up here. When everybody's buying, it's a super overcrowded trade. Now everybody's panicking, selling everything, even though they forget the very bullish things that the company said during earnings, right? This one, APLD, common concept, right? You notice that when we came close to it, it was a nice opportunity to play. Maybe again, if you find APLD down here into the 20s, if you enjoy this company and you want to play it, maybe that's an area that you want to play it, right? CIFR, exactly the same thing. We are very far extended from the 12, which casually is also the IPO period all the way from back there, yeah? So this one does not need to come all the way down into it for you to actually be able to play it with some short put options. Just play the volatility. When we came down here last month, 13, people were able to find some really nice opportunities. As we come into it and closer to it, that's where you want to start accumulating either long-term shares, if you're buying these for the long term, or short put options. When we're too far away, I'm just not that interested in participating anymore, because we're seeing a clear shift in control right here as the times get more and more cloudy moving forward, right? And these companies need to rely more and more on actual earnings and not just the hype of forward earnings. Well, you tend to consolidate a little bit more. And the same can be said about other names such as Vertiv Holdings. Vertiv is very solid, obviously, for all of their data center components, right? Especially cooling purposes and stuff like that, right? Now, you pulled way far away from the 12. You're coming down into it. So anybody who's interested in Vertiv, well, maybe this is an area that you might want to revisit this play. Names like Broadcom, super far extended from the 12 EMA. Solid company. We covered it for their earnings literally just last week. Maybe, just maybe, playing it around the 12 EMA with either short puts or exploring it for shares down there could be something you'd be interested in. Maybe Oracle, that ran super far away from its 12 EMA up here. Maybe it wasn't the best time to be buying it up here, right? But maybe now that it's down to some of its longer term EMAs, the 12 and the 26, maybe if you're a long-term bull on Oracle, this could be an area in which you revisit building some long-term shares in this company, right? Or possibly playing the short puts on it below the market, preferably lining up with a support area. So as you see, right, no matter which trade I pick out of this list, there's an opportunity to revisit your long-term monthly moving averages. And these 12 EMA trades, guys, it's nothing complicated, right? Those are the 200-day EMAs. If you're a 200-day EMA guy, just zoom out to the monthly, right? Because the daily doesn't provide the best insight. You'll just get pushed and pulled with sentiment, right? Oh, a huge green day, a huge red day. Like if you zoom in too much on this chart, man, you'll just drive yourself crazy with anxiety if you don't know that when in doubt, just zoom out to the larger time frames here. Go back in history and say, hey, every time I buy Constellation around the 12 EMA, aka the 200 daily, does it make sense? How far are we from that? You get too far away, maybe you run out of buyers. But maybe when you come down here, people find value once again, because usually for most stocks, okay, usually the 12 EMA and the 200 daily line up with better fundamentals, line up with some form of fair value analysis, right? So keep that in mind as well. Usually the 12 EMA is when you find the best confluence with fundamentals and also technical support as well. So keep that in mind for all of these companies down here, guys. I mean, the names like IPO names like CoreWeave are a bit different because they don't have one, right? But all the names that have cleanly established these before, right? Like EOSE. I have nothing against EOSE, but maybe buying it up here was not the best proposition super far away because you're too focused on the daily time frame that looks something like this, right? You just say, oh, I'll just play these casual pullbacks to the 12 daily EMA, and it's been working and working and working and working. And then eventually it stops working and you wonder why? Why are we consolidating? Well, maybe because you're running out of a pool of buyers and maybe everybody's just waiting for a better price. And if it comes down here to the 12-11 range, right? Maybe you can start selling some put options down here at 10 and wait and see if you're assigned, or at least build positions closer to here than all the way up here type of thing, right? Just maybe. At least that's the way that I trade. I mean, obviously you guys are free to do what you want. This is not a day trading channel, so I'm not going to tell you guys, you know, buy EOSE up here, put a stop loss there and go for the daily uptrend break. No, I'm not going to do that. But for you guys that are looking for longer term positions to play themes and narratives that are still going to be very much present into 2026, this is how you get the best possible prices. Another name like ANET, right? ANET is super solid. Literally have nothing bad to say about this company at all. Phenomenal fundamentals, great profitability, and the best networking player arguably in the data center landscape right now, but it ran too hot, way extended from the EMAs. But look, when it pulls down into here, maybe it can provide you with some nice opportunities, as it has many times throughout its history, especially now that they've been ramping for data center purposes. So maybe ANET is something that you could consider if it's a company that you like around the 12 EMA with big consolidation. And now that it's down from the all-time highs, you know, in that range, 30+%. Those are the locations where you might get interested into building some of these positions, right? Same thing for a company like Marvell, you know what I mean? A lot of people have been talking about Marvell a lot, and I do agree, like the forward projections for Marvell are quite good. I did the valuation right here at 92. It wasn't bad, right? But if you come back down here to some of the longer term moving averages, right? And you couple that with resistance, right? Big resistance zone, got a lot of price action down there, a lot of price action. All these guys support as well. So maybe Marvell, if you're interested in this company, right? Maybe this area could be somewhere where you might not mind building a position going for the monthly higher lows for possible expansion into 2026. And so on and so forth for a lot of these names. A name like LRCX, am I playing it up here? No, it's just too far away. Is the company fundamentally sound? Absolutely, but I'm not playing it down there. A name like ASML, right? I haven't played ASML since we established support all the way down here. After the whole, last year's sell-off, right? We came down into here, we consolidated for a little bit, now we're extended. But if ASML gives me re-entry down here for XYZ reason in the 900s, maybe ASML is one that I'll add to my portfolio again and go for the monthly swings. So I look for the monthly swings, right, on some of these setups that are the most clear setups. Not all setups are super clear. And you may not, I'm not telling you guys to force yourselves to play every single one of these names. No, the art of the game here is amongst all these names that have been suffering, try to find the ones that are coming, that are very solid companies, right? Either with great profitability already or great revenue growth prospects in the next few years, and try to line up a company with great fundamentals into a natural consolidation environment, right? Where time and time again, these areas have been tested throughout history. I mean, this was the bear market of 2022, so maybe you just discount that, right? But previous, look at AVGO in its history, right? This is all the way to 2013, 2014. Does it test the 12 EMA, or does it just perpetually run? Every time it pulls too far away, something happens and it pulls back. Every time it runs too far away, something happens and it pulls back, right? So keep that in mind. Maybe now, every time it runs too far away, something happens, whether you believe that it's a logical sell-off or not, right? Well, that doesn't matter. They're just using the volatility to consolidate the price. So use that volatility and use that consolidation to your advantage and start playing historically high probability areas of re-entry for some of these companies, right? That's how I use the longer term time frames when I'm looking. When I go on all these companies, guys, and I look to see if I want to play them, okay? I don't start on the daily. I don't start on the weekly time frames. No, I always start on the monthly, because the monthly is what allows me to go in with size or not. Like if I'm looking for big swings, that lasts several months, right, into a theme or a narrative, I need to go with the highest time frames. If you're day trading, it's different, obviously, right? Then you'd be using a combination of the daily and weeklies, and you wouldn't be going for these styles of massive moves, right? No, your moves would be very muted, kind of level to level trading, right? But that's not what I try to show you guys on the channel, because a lot of people don't have time to swing trade the markets every single day or things like that, right? So I like to show you guys what I look for in bigger moves, right? The larger moves that you can hold and you don't have to look at every single day. If you know you're getting a good price and you want to play a certain theme or a certain narrative, focus on the longer term time frames. In my opinion, it's the best thing that a lot of you can do out there to kind of avoid a lot of the short term noise, right? Because you know there's a lot of noise in the markets, man. Look at Robinhood, right? Robinhood as well, 12 EMA. Okay, so I'll be looking to play Robinhood down here in the hundreds. I'm not saying it's going to go down there. I'm just saying if it does go down here, I'll be playing, well, I'm already playing some short puts, Robinhood, low 100s. But if it goes down there, I'll be highly considering shares for maybe the next leg of expansion, which was the same concept that we derived when we talked about Palantir when it came down here, right? So, you know, just food for thought, guys, right? Just some food for thought on some of these names that are in bullish environments. Obviously, if you lose an entire monthly uptrend and there's a fundamental problem, well, that's not gonna hold up, like this one and like UNH type of stuff, right? But for everything that has fundamentally good narratives and expansions of fundamentals, right? And you know that it's just a sentiment problem, not so much a fundamental problem. Like look at Netflix. It's not a fundamental problem, right? It's a sentiment problem. And arguably, a lot of these names on the lows here, they're not fundamental problems, a lot of them. It's just sentiment right now. Sentiment and consolidation, okay? Which go hand in hand sometimes as well. So that being said, guys, that's pretty much everything I wanted to cover for the rundown of all of these names, guys. No matter what you're looking at, just pay attention, okay, to the pullbacks. Like Rocket Mortgage, another one, right? Every time it comes down there, this is why I was telling you guys, you know, in the month of October, November, late there, I was interested in Rocket Mortgage again, 15, 16. Maybe they offer re-entry again, right? A name like Ondas. Ondas has been performing really well. They gave re-entry close to the EMAs right here, around $5-6, right? $5.50 type of thing, you know what I mean? And you line it up with a very nice area of support like this, right? All these lows right there, and there you go. There you have an entry location, not a one single price, okay? Just an overall entry location, but you're understanding that, you know, chasing it up here, maybe not the best proposition. If you missed it, you missed it. There's so many other names that you can possibly explore if you're looking to get into them. And then when these names consolidate, maybe you can start positions on these and ride them into their expansionary phases. So that's what I want to talk about for the biggest gainers and losers of the day today. Obviously, a lot of the names that are on the highs, right, are names that we talked about earlier in the video when we covered the indexes. You'll notice a lot of consumer-facing names here, okay? Oscar Health is Oscar Health, but a lot of consumer-facing names and names that haven't got that much love. Brown Corporation, insurance play, PGR, John Deere as well, right? Classic interest rate play. They pull back into support, right? Trying to reclaim the moving averages, looking for the monthly expansion. It is a rate cut play overall. Very solid company. Nothing wrong with John Deere overall, right? A name like Adobe that's just gotten absolutely destroyed this year has done absolutely nothing. We covered their earnings. We said that risk to reward on this name was largely favorable at this point in time, right? But it's not for everybody overall. Names like Waste Management. Waste Management has done nothing all year. It's a very boring name, but sometimes boring names, they have a lot of institutional support, especially during periods of market rotation. But there's nothing, you know, this one consolidated a lot. There's nothing wrong with this company. Names like Copart, right? Or Copart right here, right? Copart absolutely fell apart completely, you know? That being said, it's next to a all-time high resistance from 2021 back down here, you know what I mean? When does Copart ever get weekly oversold? 26 RSI, when? What, during a global pandemic? And then when? During a great financial crisis? So you're telling me that the landscape on Copart is so bad right now that it's synonymous with a global pandemic and a great financial crisis? Arguably not, right? So this is sometimes what allows you to call the bluff on some of these very high quality companies. I mean, the profit margins are there for this business. It's not a profit margin issue, right? In terms of the forward expansion of the business, it's not an EPS problem. It's not a revenue problem. Sometimes it's just a sentiment problem, right? Sentiment gets ingrained into the stock. And if you know that the fundamentals are pretty good, right? Just like on Visa and MasterCard. Visa and MasterCard have done nothing all year. What happened to them? absolutely nothing. Their earnings have been good this entire time, but just sentiment and the rotation wasn't there as people were just ultra focused on, on the AI and tech trade. Names like SPGI and names like Moody's as well. Just no love for these whatsoever. But what they have been doing so far is just sequentially having better and better and better earnings as their price moves sideways, which gives them a cheaper and cheaper valuation. Names like Booking.com, travel's been strong all year, but Booking.com has had really nice rally so far, pulled back to the 12 and the 26, which usually, when you're buying in here, it's usually good opportunities in terms of historical context, right? So names like this have done absolutely nothing and now finally starting to do a little bit of something. The earnings are good. The stock's been, largely flat all year so far. And as a result, maybe opening up some decent opportunities for you guys that are looking to diversify away from the traditional AI trades overall, like type of stuff, right? So just some ideas out there. I know there's a lot of stocks on this list, even companies like Intuit, right? Intuit's been doing nothing. It's been doing literally nothing all year. Have they had bad earnings? No, they've had fairly decent earnings all throughout the year. It's a very profitable company overall. Okay, there's nothing wrong with their profit margins. They're decent. They're not, NVIDIA's margins, but decent. They're not losing. EPS streamlined up and to the right. Revenue up and to the right. Has Intuit been trading rich, in the past few years? Yes, but now you got like a year and a half of consolidation nowhere while improving earnings. So that being said, guys, right, maybe also something to explore. There's many, many, many names out there that have just done nothing, okay, all year or close to it and looking very good. Like Grab's been a stock that I've been buying into recently as well for some, for a smaller position, smaller share price position. I have some leaps and I have some shares in Grab as well. But look at this one, pull back to the 12 EMA, support overall, nice expansion of the business fundamentals, nice forward growth prospects. So I'm looking for all these names that haven't done much recently and looking to kind of carry, some money into these names into 2026 overall. There's many, we can talk about this list, guys. I can do a whole video on this list for like 3 hours, but that's not the point, right? The point is just to show you guys how, when I move through this list, what am I looking for and why? So hopefully that all makes sense. That's everything I had for you guys for the biggest gainers and losers of the week. And for the portfolio, I'll do a super quick update because we're like an hour and 27 minutes into this. So I'll show you guys the trades that we closed last week. Very easy wheel trades. I won't go through each one, but a lot of these trades were closed early because I repurposed the capital for different wheel trades. The Rocket Lab was taking profit. The gold trade, we kind of broke even on. Stop came back to break even, so we closed that. So just a lot of wheel trades in the past 2 weeks that we've been farming overall. And as a result, the portfolio, in terms of wheel capital, it's looking pretty good for our positions. And if you take a look at what I repurposed the wheel gains into, well, just some of my favorite plays that we've been talking about on the channel, right? So we got the Amazon 220 puts for next week. We opened those a couple days back. We opened the Robinhood 109s for this Friday as well. The Iris Energy, which is a bit of a lottery trade, 35, but it's around that 12-monthly EMA that we've been talking about. We have had the Netflix short puts here for about a week and a half at this point. Hundreds. We'll see if we get assigned or not. My DCA is under 90 for that if I have to. NVIDIA, the same location around the 12 EMA, which we've been talking about, and support 167.5. We have that trade as well. We put it on the other day. UiPath is just something that I don't know if I told you guys about this call position on UiPath that we took before the earnings, but I'm just looking to carry some shares. You might notice I have a few high risk reward bets that I haven't told you guys about. The Discord members know about these. We have Kraken, we have TE, we have UiPath. We have a few other ones that are not in this portfolio, but in my other portfolio. So the Discord members know about all of them, but maybe you guys don't. So UiPath, I'm just trying to get some shares, carry them into the next 2-3 years. And SOFI, we've had this SOFI trade ongoing for a while right now. These are the short puts that I'm carrying into this week of extreme volatility, all at levels that I do not mind being assigned. And we still have some decent buying power into next week as well. Now, the reason the account was down so much was not necessarily these wheel trades over the course of the Friday session. No, it's just our leaps, right? And some of our volatile, like TE Energy, man. This one moves a ton every single day. But a lot of our leap positions, right? This is the second batch of leaps that I've done this year overall. You might remember we made some fantastic money earlier this year with many different leap call positions, whether it was Apple or Uber or Google or Micron and so many other things. Oscar Health, Rocket Mortgage, so many leap calls. This is the second batch that we started in anywhere from September, October through pretty much the consolidation period of November. This is the second batch. So a few of these we've had for a long time, such as AMD, Amazon, and even the Visa, which we opened about a month and a half ago at this point, right? Those are okay. They've been doing okay. But the recent ones, they haven't expanded yet, right? Well, CoreWeave, we were up on this one. Now we came down. But a lot of these leaps, guys, are like June or December of 2027. I have a ton of time. So that's why the account fluctuates wildly. It's very normal. Because it's a small account, I'm going for an aggressive profile. I literally have half of the portfolio in leaps, right? So long options here, pure leaps, 9,700 bucks worth. And down here, the debit spread portion, which is largely only leaps as well, 21K, right? So obviously when half the portfolio is in leaps and you get big red days, especially tech-centric big red days, right? Well, the portfolio is going to come down. So none of these leaps have changed. The only ones that I've added to in the last 2 weeks or so have been Netflix, leap call debit spread 114 to 180, good risk to reward on that trade, and NVIDIA. NVIDIA has round trip the gains that we had. We got it when it was around here, 175 or so. And NVIDIA also December 2027, 190 versus 330 bull call debit spread. Everything else we've held for some time, right? The rubrics we've had for like 4 or 5 months at this point. The Amazons and the AMDs we've had for a while at this point as well. So we have some running gains right now, but a lot of the second batch of leaps that I've had, they just haven't really ran yet, right? So we're still waiting for that expansion phase, which is why I put so much time on them. But none of these plays should be foreign to you guys. Maybe the only plays that I haven't talked too much about are Kraken and TE and UiPath and maybe Grab. I think I told you guys about the Grab calls that we took when Grab was like $4.75, 80 cents or something like that. So these new batches of stuff, right? They've been volatile recently, but we've bought them in the past 30 to 60 days, arguably. And as a result, they just haven't ran, right? Because the markets have just been somewhat choppy and trendless for the past 2 months, but I have a ton of time on them. In terms of the small call debit spreads, I've had these for a while. They've been lagging. The SPGIs, well, Meta was an earnings trade, and Resolve down here was also a lottery play. So those I'll be winding down, taking a bit of a tax loss on those. But the Adobes, the CRMs, and the SPGIs are the only short-term swing trade that I still have on, and I'll try to wind these down arguably maybe into the end of the year. Adobe and CRM, I can afford to keep them into January, but SPGI, it's kind of oscillating here. SPGI hasn't done anything for like an entire quarter. We've been here, right? My strikes are 510, 520. So we'll see. Maybe this one gets big rotation. I only have a month of time left on it, so I can't really outstay my welcome on this one. So if it does pull up here and I can close it for break even or a little bit of profit, I'll probably do that. It just burned too much time. We started this contract with 4 months and we've used almost all of it. So if I can wind these down, these short-term call debit spreads or whatnot, I will. And then we'll kind of embark into 2026 with just solid wheel plays and then a whole bunch of leaps, the second batch of leaps that I'm keeping into 2026 as well. So arguably that's why the portfolio fluctuates wildly, right? It's not like the previous years, 2023 and 2024, when I was running this account with 100K in capital and I only had 10, 15% in leaps and the rest was only wheel. You might remember back in the day, had much less positions and it was more wheel trading. Now, since we're going for big expansion, right? Well, we go for a lot more call options. And obviously, depending on the market fluctuations, well, the portfolio will fluctuate wildly as well. But I like all these leaps. I like my entry levels on them. So now we're just kind of waiting for the expansion. So we're going for the big expansion into 2026, which is why the P&L curve on this portfolio is not like 2023 and 2024. 2023, 2024 was basically only wheel and like 10, 15% leaps, 10K, 15K worth of leaps on a 100K portfolio. So the expansion of the ROI was like this because it's only premium farming, right? This year, I started off with like 45K and we've loaded up towards the more risky sides. Obviously, the P&L profile is going to be an expression of beta with the overall market, right? And depending on the timing of the leaps and, you know, when they run, when they don't run, well, obviously, you know, it's not smooth and streamlined like a premium farming strategy would be when I was doing it in 2023 or 2024. But I showed you guys a few weeks ago, my big account, right? They're like 600 something thousand, like that's up like over 45% now year to date. I'll show you that one. I don't show it often. I show the Discord members sometimes, but I'll show it towards the end of the year. That one, you know, this year has been just very smooth. Premium farming, right? So if you're premium farming, like a lot of my members do, and you don't have 50% of your accounts in leap call options going for the big expansion of the account, high risk, high reward, well, you're not going to have the high beta swings like this, obviously, right? It's just very logical. So that's everything in terms of the portfolio, what we're carrying into the end of December and also into 2026. There'll be a few changes here and there, but largely right now I'm just focusing on my favorite wheel opportunities of the bunch. As you can see, high quality companies. And in the last few weeks, if you pull up the Discord list right here, like what have we been taking, right? In the last few weeks here, just a bunch of high quality stuff, right? No lottery trades, no nothing that shouldn't really be there, essentially, right? Just very, very casual things that you guys see me play kind of all the time, right? The Visas, the Amazons, the SOFIs, the, HIMs, a little small position sometimes, Oscar, the Uber. So, same thing up here, right? The Airbnbs, nothing fancy, no crazy plays. I'm not playing that much Iris Energy anymore, not so much NBIS, no BITX, no BMNR, just very solid companies that are currently pulling back. As you can see right now, Amazon, Robinhood, one small iron, Netflix, NVIDIA, and then the SOFIs as well, right? So just concentrating a lot of my wheel plays into my favorite companies at very attractive levels. So that's it for me today, guys. Hopefully you guys enjoyed the video. I know it was very long, but the weekend update videos sometimes are. I figure since it's the weekend, I could spend a bit more time on this, give a lot of context, but moving into the next few weeks and into the end of the year, right? The videos, I know I say this all the time, but the videos get shorter and shorter. I think I've given you guys, I've basically set the table for the next few weeks and into 2026 as well. So now you guys kind of know where we stand, or at least you know where I stand in terms of sectors I'm looking at, opportunities I'm looking at. If I'm playing these volatile names, how am I playing them? What am I waiting for? So that's it for me today, guys. If you enjoyed today's video, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. Would love to have you back. And last but not least, if you have any questions, feel free to leave them down below. And obviously, guys, if you wanted to join our Discord, well, the link to join our Discord and over 300 members such as yourself is down below in the video description. In the Discord, well, obviously you get access to all of my trades in real time, whether they're the call options, the swing trades, right? The wheel trades, of which we do a lot of wheel trades, not only short-term weeklies, but also 2, 3, 4 week contracts. I share some of the ideas and some of the trades that I do in my big portfolio as well. For those of you guys that are interested, we do long-term portfolio investing as well, right? So that being said, everything, right, that I do usually on a daily and weekly basis, I will show you guys, right, a lot of the trades here. So you get access to all the trades in real time. You also get access in terms of our private morning live streams, Monday through Friday, right? I stream for about 2.5 hours at the market open. I trade live, and then I take all your guys' questions on your stocks, your options, your long-term portfolios, different strategies, et cetera, et cetera, et cetera. That's the best place to ask me all of your questions, right? And if you're not there, they're recorded, and you can also ask me your questions in our chat rooms. You also get access to the private video section, which is like 15 hours of educational content, my trading strategies, how I do fundamental analysis, technical analysis, trading psychology videos, so much, all of my educational content, right? It's all in there, and I'll never put it on YouTube. It'll only ever be in there. And last but not least, guys, you also get access to, just a little bonus, all of my watch lists and all of my charts. Whenever you see support resistance areas on a chart like this, whenever you see fundamental breakdowns of a company on like over 100 companies right now, right? You can literally just copy paste all of my charts, all of my many watch lists that I use to trade the markets on a given day. If you just wanted to copy all that, it's very easy to do. It takes like 15, 20 seconds, and all this just becomes yours. That's all I had for you guys today. If you're interested in joining our Discord, we would love to have you in there. The link to join us is down below in the video description. And if I don't see you in the Discord, I will see you back on the channel. Take care. Have a great rest of your Sunday or Saturday evening, or whenever you're watching this video. That's it for me. See you Sunday for the top 5 options video. Take care and peace.